Hey everyone, welcome back to the channel. If you're a trader who's ever stared at your chart wondering, is this the right time to enter or exit? Maybe you've jumped in too early on a reversal that fizzled out, or held on too long and watched profits evaporate. Then stick around. Today I'm sharing a game-changing tool that spots hidden momentum shifts and turns them into actionable zones on your chart. Let's dive in and make your trading simpler and smarter. First off, what is this indicator all about? It's basically a smart oscillator that combines momentum analysis with divergence detection to highlight potential reversal points. The big problem it solves is spotting when price is losing steam, even if it's not obvious on the chart yet. Traders love it because it projects these momentum mismatches as clear support and resistance zones, helping you time entries and exits with more confidence, especially in trending or ranging markets. No more guessing where the buyers or sellers might step in. It's like having a roadmap for hidden buying or selling pressure. All right, let's get it added to your chart. Head over to TradingView, assuming you're logged in and have a chart open for your favorite asset, like a stock, forex pair, or crypto. Click on the Indicators button at the top. In the search bar, type RSI Momentum Divergence Zones Chart Prime and hit Enter. It should pop up as an open source script from Chart Prime. Just click on it to add it to your chart. Boom, it's there, usually as an oscillator below your price action with some overlay lines on the main chart. Now, how do you set it up properly? Once it's added, click the gear icon next to the indicator name in your chart's indicator list to open the settings. The defaults are pretty solid for most users, but here's what to tweak for beginners. RSI length. Default is often around 14 mean, but you can adjust it here. Use shorter length, 8 to 12, if you're on lower time frames and want more frequent zones. Use longer length, 20 to 30, for cleaner, higher probability zones on bigger pictures, fewer but stronger signals. Start with the default and experiment. Divergence detection. Make sure this is toggled on. It usually is by default. This is what powers the whole thing. Without it, you just get a fancy RSI with no zones or labels. Quantity of divergence zones. This is a game changer for chart readability. Set it to 5 to 10 to begin with. Too many zones equals cluttered mess. Too few equals you miss recent structure. 10 is my sweet spot for most charts. You can customize colors, maybe green for bullish zones and purple for bearish to make them pop. For time frames, this shines on higher ones like 1 hour, 4 hour, or daily charts for swing trading. Avoid super short scalping frames like 1 minute, as divergences need space to form reliably. Hit OK, and you're set. Key features. Momentum-based RSI. Source. Instead of regular price data, it uses momentum, like the rate of price change, as its input, making it more sensitive to shifts in speed. Automatic divergence detection. Optional. The indicator scans for divergences on its own. No manual drawing needed. You can turn it on, off. When enabled, it spots regular and hidden bullish, bearish divergences automatically. When enabled, the indicator continuously scans for bullish divergence. Price makes a lower low, while RSI forms a higher low. Bearish divergence. Price makes a higher high, while RSI forms a lower high. Divergence labels and markers. RSI, pane plus chart. When a valid divergence is detected, on ERSI, pane shows clear bull, green, or bear, red, labels on the IRSEI oscillator pane. Colored lines show pivot structures. On price chart, also places triangle bull or triangle bear markers right on the price chart at key points for instant visual cues. Lines highlight the exact price level at the divergence origin. Divergence zones/levels. Toggleable. Draws horizontal green, bullish, or red bearish zones on the price chart from divergence points. These act like dynamic support, resistance. Toggle them on, off, if your chart feels too busy. Dynamic zone extension. Logic. Zones keep extending rightward as long as price respects them. Bounces without breaking. If price breaks through strongly in the wrong direction, the zone turns dashed or fades, showing it's no longer valid. Zone layering and limit control. Limits how many zones show at once, set to 5 to 10, so your chart stays clean. Layers recent zones on top. Older ones fade or get replaced to avoid clutter. Color customization and intensity. Change bullish, bearish colors, line thickness, and background transparency easily in settings. Adjust intensity so zones stand out perfectly on dark, light themes without overwhelming candles. Okay, now the fun part. How to actually trade with it. We'll focus on practical rules for longs and shorts, always combine with your overall strategy, like trend confirmation or candlestick patterns, and use proper risk management. For a long entry, wait for price to approach a bullish green zone from above. That's your potential support area. Look for signs of a bounce, like a hammer candle or the RSI crossing up from oversold. Enter long once price closes above the zone or shows confirmation. For example, if it dips to a triangle bull zone and holds, buy in. Stop loss idea. Place it just below the bullish zone. Take profit. Aim for the next bearish, red zone above as resistance. Here's another long entry scenario. In a downtrend, spot a hidden bullish divergence, price lower low, RSI higher low, forming a new green zone. If price retests that zone without breaking it, enter long for a counter-trend bounce. Great for scalps in ranging markets. Flipping to shorts. For entry rules, watch price nearing a bearish red zone from below. That's resistance. Confirm with a shooting star candle or RSI dipping from overbought. Enter short on a close below the zone. Stop loss just above the bearish zone. Take profit. Target the next bullish green zone below. Common mistakes to avoid as a beginner. First, don't trade every single divergence or zone that's overtrading. Wait for confluence, like volume spikes or trend alignment, to filter signals. Second, ignoring the dynamic nature. If a zone turns dashed after a break, don't force trades there. It's invalidated. If you found this helpful, smash that like button and subscribe for more practical trading tips.